The Bank of Canada is meeting on Wednesday, July the 12th to decide whether it's time to start raising interest rates again. This has already had a significant impact on trading in the Canadian dollar and may continue to do so in the coming days. Back in 2015, when the price of oil crashed, the Bank of Canada brought in two emergency interest rate cuts, bringing the benchmark rate down from 1% to 0.5%. And most people had been thinking through the early part of 2017 that this would continue with oil hanging around in the low 40s. However, over the last few weeks, the Bank of Canada has been increasingly hinting that they think it's time to start moving interest rates back up to where they were. And Governor Poloz and a number of his deputy governors have been out saying things like they think that the stimulus has run its course. They think that the Canadian economy has adjusted to the lower oil price, and that they think that the central banks should move ahead of inflation hitting their targets. So all of these have been taken by the street as hinting that the Bank of Canada is prepared to start raising interest rates again, perhaps as soon as this month, with say one rate hike now and a second rate hike at a meeting sometime later in the year to probably bring rates back up to the 1% level. And we've seen that with some big gains by the Canadian dollar. I'm going to start by showing dollar CAD here, which, if we go back, we'll see had weakened in 2015. This here is the US dollar going up and down against CAD. So going up means loonie weakening, going down means loonie strengthening. When the oil price collapsed in 2015, we saw the Canadian dollar weaken dramatically. In the first recovery phase, when oil bounced back from 25 to 50, we saw a substantial recovery in the loonie. In the last year or so, though, we'd seen the loonie steadily weakening. We had this rising channel in dollar CAD. Now look at this, though. In the last few weeks, since the Bank of Canada has started to talk hawkishly in the last month or two, we've seen a decisive turn downward, loonie strengthening against the US dollar. We've broken this channel here. That was at 132. We've since gone down, broken 130, holding below 130. We've seen a definite shift in RSI momentum from being overbought down below 50, indicating a downward trend change, and now we're actually a little bit oversold here. That suggests to me that we could see some volatility around the news. Now, it looks at this point as though the Canadian dollar has priced in at least one rate hike. And we see it here in dollar CAD in the reaction to the Canadian employment report. For the second month in a row, we had the Canadian job spike well above 40,000, indicating a strengthening economy. And what did we see when the jobs number came out? Boom. A nice big sell-off in dollar CAD, a nice rally for the loonie, and it has continued to trend lower during the day. So that tells us that increasingly a rate hike is getting priced in. If we do get one, given that dollar CAD is a little oversold, we may see the loonie kind of digest recent gains in the near term, and perhaps even a bit of profit taking while traders start to figure out, okay, how far off is the second rate hike coming? When could the next shoe fall? The other thing to note, though, is that if the Bank of Canada doesn't raise rates and they hint towards hikes in the future, then that could be seen as a significant disappointment, and that could spark a bearish reversal in the loonie. The other thing to note here, as I bring up the dollar CAD chart, or the CAD US dollar chart, this one here shows the Canadian dollar going up and down. And what I wanted to show with this chart in particular is that normally over the longer term, the loonie tends to trend up and down with the price of oil. Now, this here shows that in the last couple of months, the loonie and the oil price have decoupled dramatically, particularly in the last few weeks here, where we've seen the loonie steadily increasing on this anticipation that the Bank of Canada could start raising rates. Meanwhile, crude oil has been all over the place, huge volatility and generally falling. It's not often you see this kind of divergence open up between the loonie and the oil price. So this is pretty significant as well, because now expectations are getting baked into the point where if the bank for some reason does not raise rates, then you could see a significant retrenchment in the loonie, or it could just fall off the table. So keep an eye out for that. It looks as though from many accounts, so that the Bank of Canada is looking to raise interest rates, or at least seriously hint towards it coming soon, and so this could have a significant impact on trading in the loonie in the coming days.